Hi everyone, we will just begin in a couple of minutes. Hi, good morning everyone, and thank you for joining us in yet another session in our monthly series. India recently crossed the 4 trillion GDP milestone, surpassing Japan and becoming the fourth largest economy in the world, and amongst the fastest growing economies currently. What lies ahead as we move from $4 trillion to $10 trillion? How will this structural transformation play across asset classes, sectors, and portfolios? To help us unpack these questions, as always, we will be joined by Vaibhav Porwal, our co-founder and head of investments at Deserve. Hi, Vaibhav.
Hi, good morning.
Along with Vaibhav, let's welcome our guest for today, Mr. Pankaj Tibrewal. Pankaj is the founder and CIO of Ikigai Asset Managers. Prior to founding Ikigai, Pankaj was a fund manager at Kotak AMC, widely recognized for his sharp stock picking skills and deep understanding of India's structural growth themes, especially in the mid and small cap space. Welcome, Pankaj, and thank you for joining us today.
Thank you, Hardik. Thank you.
Let's get started. Pankaj, the first question to you, and we'll begin with a broader macro view of India. We've seen India holding up remarkably well in light of recent events, especially a complex global backdrop amidst geopolitical tensions, which now, of course, seem to have died down a little bit until recently, until as early as today morning, we've just heard about Russia again going against Ukraine. And obviously, we saw shifting trade dynamics. From your vantage point, how do you read the current macro environment in India? And where do you see the Indian economy heading in the short to medium term?
So thank you, Hardik. I think so. Just to put things in context, I think last year we saw a shallow kind of slowdown. And the reason I use the word shallow is because it lasted for a couple of quarters. Many people thought it's to be a structural issue in India. But somewhere I think all marks to RBI. I think the entire scene changed from January onwards. And that's the reason we changed our cautious stance to constructive stance somewhere in February and March. The reason were two, three. First, I think people took the first half slowdown because of various reasons like election, uh, rainfall being elongated for a long period of time, as that India is going through a structural slowdown. But RBI took cognizance of that and full marks to the new governor that the system was deficit for 3.5 to 4 lakh crores in the month of January. Liquidity was tight. एंड हम जिससे भी बात करते थे चाहे वो डिस्ट्रीब्यूटर हो डीलर हो कंपनी हो सबका एक ही वर्जन था कि चक्का जाम है द लिक्विडिटी इज नॉट मूविंग द न्यू गवर्नर टुक दैट सीरियसली and he injected more than 6.5 lakh crores of liquidity into the system. And as we speak, from 3.5 lakh crores deficit, we are 1.5 to 2 lakh crores positive into the system. The second point, you saw the bazooka yesterday again. You had 50 basis point of rate cut done. And again, markets were surprised by 50 basis point this time around. So incrementally, the cost of fund is coming down. Incrementally, the liquidity is improving. The third, we saw the GDP data coming in. After 3 quarters at 6.5 or slightly lower, we went back to 7.5% GDP growth. And that clearly shows that India has the ability, even if the world is slowing down, the domestic engines could fire. And just to put things in context, everybody was complaining about the capex by the government. In the month of March alone, we saw 2 lakh crores plus of capex being spent by the government itself. And just to put things in context, this 2 lakh which government spent in month of March, was 2015 entire year's government capex budget. And what they spent in January, February, March was 2020, not too far away, the entire year's government capex budget. So we have come a long way. And in terms of that, I believe that the macroeconomic stability is far better. For the first time, the 10-year bond yield between US and India is just 1.6, 1.7%. It has never happened in the history ever. And that could only happen when the inflation dynamics and the currency outlook of any country is better. And hence, we believe that we are lucky that we are seeing such stable macroeconomic situation. And last but not the least, don't forget, post COVID, the world has printed money left, right, and center. The fiscal deficit in US is at the worst level since World War II at about 7.5% of GDP. On the other hand, in India, we went in COVID at 9% of GDP, center fiscal deficit to GDP. Every year we have been consolidation, fiscal consolidation. Last year we ended at 4.8, and this year's target is 4.4. So when the world is printing money, interest rates are moving higher in Japan, in US. India has brought its fiscal deficit down. It's like consolidating your balance sheet like a corporate. Forget about P&L, focus on balance sheet. And that's what India has done. And in that 4.4, we have been able to grow at 6.5%. So 9% to 4.5%. And hence, we sacrifice some growth to consolidate on the balance sheet. So from a macroeconomic, I think India is in a very, very sweet spot. And as far US exports are concerned, it's only 2% of our goods and services GDP as a percentage of export. So we are not that much impacted by this entire drama on tariff and the uncertainty which has got created. So I believe that we are in a very sweet spot as far macro is concerned, Hardik.
No, very well put. If I were to summarize, essentially, fiscal prudence demonstrated during the budget. We were very strong in terms of other macros. Liquidity was sparse, which, based on all the monetary actions by the RBI, is has now come back to the market. And relative to global economies, as you mentioned, the difference between the 10-year between India and US has significantly narrowed. And that's perhaps for the first time in decades that we see such a small gap between the 10-year bonds of India and the US. So, in absolute terms, we are on a strong footing. In relative to other economies, we are even stronger in that sense. So, from a macro positioning, we are absolutely in place. Webber, the next question in, given that outlook is for you, uh, and we'll move on to the next segment where, given where we are in terms of macro, what part of the markets do you believe are well positioned to benefit from this economic momentum? And the chart clearly suggests that over the last 20 years, the composition of sectors that contribute either to GDP or to Sensex have significantly changed. Looking forward in the next decade or so, what shift in trends do you see in terms of contribution to GDP and index, especially as we see shifting consumer and business trends?
No, thanks, Hardik. The first thing is the way India's macro are shaping up and the way RBI has reacted. If you look at what RBI has done and look at it in the context of GDP numbers which were released, the weakest link in that was private consumption and private capex. RBI has pretty much solved for that. RBI said that we'll give you front loading of rate cut, will infuse a lot of liquidity in the system, and both of these are critical booster for private consumption and private capex. Along with that, the tax cut, which was announced in the budget, and 8 pay commission implementation, all of these things will boost private consumption in a big way. I think looking ahead, if you look at India's GDP movement from 2005 to 2025, and then look 10 years ahead, how it can look in 2035, In 2005, we had about 30% allocation to industry, about 20 to 22% to agriculture, and about 50 to 52% to services. That composition was that of GDP. In terms of index, we had capex heavy businesses like oil and gas and industrials, which were the dominant part of Nifty 50. Today, when we look at our index, 35% of the index is in financial services and 12% is in IT. Composition and allocation to capex heavy industrial businesses is going down. 10 years down the line, it's a little bit of crystal ball gazing, but my sense is that consumer discretionary and digital infra play, along with clean tech and green energy, will have significantly dominant part in the index, and composition of GDP will also move in that direction. Healthcare, which again is becoming a big industry, should also have a larger share in the index. So these are some of the sectors: clean tech, green energy, digital infra, platform play, healthcare should be a dominant part of the index 10 years down the line.
Great, Vaibhav. Pankaj, you want to add to that? Any sectors, any themes that you feel will follow in the next few years? Sorry, you're on mute, sir.
So I think more than sectors and theme, I think what this will create is more 100 baggers, which in the next 20 years I am bothered about. See, sector vector का ज्ञान तो ठीक है, narratives is okay, but finally तो stocks ढूंढने हैं. And I think what excites me most is the entrepreneurship at the ground level. Uh, Trust me or not, I mean, the kind of businesses and entrepreneurship I am seeing at the ground. And I think if we can identify those right promoters, and I have two or three metrics which I normally go by. Normally, my research has suggested that entrepreneurs between 40 to 55, 60 create the maximum wealth in India. The reason it's that because by 40 you have done your mistakes, you have seen a couple of cycles, you have mellowed down, you have moderated yourself, humility is there, and along with that you have fire in the belly to prove something. By 55 60 आप अलग जॉनर में चले जाते हो कि किसके लिए कर रहा हूँ, क्यों कर रहा हूँ, क्या है. So you know that 15-20 years, if you can identify right promoter, right businesses, your entire thought is done. And I think between 4 to 10 trillion dollar over the next 10-15 years, you will find amazing number of businesses which you have not even visualized. I'll give you small examples which has helped me in the past. Um, and just to put disclaimer, this is not a recommendation to buy or sell. I'm just sharing my experiences of how we identified, and when we kept patience, these turned out to be 100 bagger, 200 bagger. I'll give you a small example of a company called Solar Industries. Uh, in 2006, it came for IPO. I still remember. It was a 1,000 crore company, 83 crore raised in the IPO. And every 3 years, the top line became bottom line. After that, they just raised maybe 50, 100 crores once in their lifetime. But that 1,000 crore market cap today is 1,50,000 crore market cap, right? And they kept on growing and seeding new businesses. And the intent of the promoters was super good. So the point I'm trying to say that there will be such 100 baggers in the next 10-15 year journey. What you have to keep as an investor a patience, because businesses never move in linear line. कि ऐसे एक straight line ऊपर जाएगा वो कभी नहीं होता है. There are couple of years where business will go through a slowdown. They will have no growth. But you have to keep evaluating कि नीयत सही है ना प्रमोटर की. अगर नीयत सही है, बिजनेस में ओवरऑल अपॉर्चुनिटी है, आप मान के चलो वो बिजनेस वैल्यू क्रिएट करेगा. And many businesses like financial services, many businesses like green tech, he talked about platform companies, he talked about a lot will happen on the semiconductor side, EMS. Look at a company which we took another 5% stake after the IPO was Dixon. आज लोग डिक्सन, लेकिन उस समय लोग बोलते थे ये तो छोटा मोटा असेंबली यूनिट है. और IPO के बाद they have not raised a single penny of capital in the last 6-7 years, and they have grown 10x in that. So identifying right cash flows, right businesses, and right promoters, I think is the key for success in the market over the next 10, 15 years. And that's my entire focus is going on. Can we identify those right promoters in the right businesses, right sectors? And I think opportunity is immense in my view. So ये जो पूरा नरेटिव है ना, लार्ज कैप, मिड कैप, स्मॉल कैप, ये हेरा फेरी से निकल जाओ। ये हेरा फेरी में जब तक बैठे रहोगे तब तक बिजनेसेस नहीं आइडेंटिफाई कर पाओगे। ऐसा नहीं है कि लार्ज कैप खराब है या मिड एंड स्मॉल कैप खराब है, right? As large cap mein what Bharti has done and in what circumstances they have done is phenomenal. No other company has been able to create such kind of a competitive edge and a moat what Bharti has done. It's a large cap, all respect to them, and they're growing at 25-30%. Why not? So I'm not against any cap, but what I am saying that we have to identify grounds up right businesses, right promoters. That's my intent, and India is a bottom up story. India is at times a top down story, but over a longer 25-30 year period, it's a bottom up story. It's not a top down story. Top down तो पता है, opportunity है, but अब नीचे जाके अच्छे businesses खरीदना is our responsibility.
No, very well said, sir. One of the things that you highlighted, especially in context of stock picking, we will cover that in later part of the segment. At a broader level, though, we would obviously want to have a view on the categories as well, which is why we'll move on to the next segment. Next segment is again for you, Weber. In the context of Indian equity space, view on different categories. In fact, we've done this segment before where we've got industry experts come out and share their concerns around frothy valuations, stretched liquidity in the mid and small cap segment. Any view generally, and what we've tried to do here is also give a view of percentile wise P multiples so that we are able to identify whether the trends differ at different levels within the same indices.
No, absolutely, and that's why this chart is extremely relevant. We sometimes look at the averages and uh, decide based on that. But when we look at the numbers, at an aggregate level, obviously, large cap offers better margin of safety today. And within large cap also, we have been saying that active fund management, stock picking, as Pankaj spoke about Bharti Airtel's example, some of these companies which are growing at a faster clip will do much better for investors than investing in broader passive strategies. In mid and small caps also opportunities are there. You have to look at valuations. You have to stay away from segments which are driven purely by narrative and are trading at valuations which are not sustainable. We have spoken about this in the past also, that when you invest at very high valuations, it becomes very difficult to create wealth from investing at those valuations. So dispersion in valuation, the gap between average valuation and lowest and highest valuation is much larger in case of mid and small cap than in case of large cap, and therefore large cap offers much better margin of safety, but growth is also much lower. Growth is much higher in mid and small cap, but valuation dispersion is much higher. So stock selection, stock picking will be the trick going ahead in the market, then investing in broader indices is what my general view on the market is.
No, absolutely. And the next slide, essentially, Pankaj, we've picked it up from one of your fact sheets. We actually like going through your newsletters and details that you share with us. If we move on to the next segment, and this is an extension of the previous slide, really, where we are seeing that there is a lot of divergence between average and median. And this is one of the points that you had mentioned in one of our discussions with you, which usually doesn't happen. And if you see on the charts, the rally started with a much more broader rally across stocks, which is the top left hand side chart, and then it started becoming narrower. And as we move towards a little bit of correction, we saw that market rally or the market movement was led by a select few stocks. What is your view? What is happening here? How does this play out? Are we seeing that generally the leadership is narrow across a select few stocks, across segments? What's your view? How will this play out?
So let me first address your first part, which you addressed to Weber. I think generally people are confused because the narrative in January, February was sell all mid and small caps, move to large caps. That's where the safety is. To a certain extent, we agreed to that thought most part of the last year because it was craziness all over. आप आईपीओ बोलो, वो 50% ऊपर लिस्ट हो रहा है। प्रमोटर बेवकूफ थोड़ी है कि वो सस्ते में माल देके जा रहा है। Now you are seeing that 80% of those IPOs and all those issuances which happened are underwater. So I think there was a huge euphoria last year somewhere, and I think January, February was right correction in a way. The reason we turned constructive, and for all the participants who are there on the call, I would strongly urge that in the April newsletter, going against the tide, we gave 5 reasons why the narrative only of sell mid and small caps and move into large cap may not be the correct narrative. And there are 3 or 4 points, but just for the time's sake, I will just like to draw one important point. Just Hardik, can you give me that share? If you can.
Yes, you can
Stop.
share. I think we've given the share rights.
Can you see this?
Yes.
Just a minute. Yeah. Can you see this?
Yes, we can see this.
Yeah. What I am trying to say is finally it's PEG, which is price earnings growth. And if you look at, it's a very easy statement that look at the valuation, premium of mid and small caps and look at the earlier median discount or premium. But just to put things in context, last 3 years and even in last 12 months, which is FY25, mid caps have grown at a much faster pace than large cap. And even in last quarter, though the reported NSE 500 earnings growth was 7-8%, but mid cap earnings growth was in excess of 20%. So agar growth आएगा तो उसको premium मिलेगी, and that's what I think is the point. The second point which I mentioned in the newsletter is that headline valuation देख के मत judgment करो कि ये महंगा है कि सस्ता है. Let's go into the detail. In large caps, which is the top 100 companies of India, 50% profit आपका PSU, banking sector, which is PSU banks, private sector banks, oil and gas से आता है. 50% of your profit pool of top 100 companies come from these 4-5 sectors, which are generally low P sectors over a longer periods of time. And in that same thing, in mid and small cap, that's about 10 to 15% of the profit pool. When I do X of PSU banks, private banks, oil and gas PSUs, the Nifty PE 2 months back was not 20x, but 27x. And on the same breath, the mid cap P and the small cap P was 23 and 25x. So when you compare apples to apples, ऐसा नहीं है कि निफ्टी के अंदर जोमेटो नहीं है जिसका कोई पी नहीं है, राइट? ऐसा नहीं है कि उसके अंदर ट्रेंट नहीं है जिसका पी 100 का है. So I'm just trying to say that when you do apples to apples from a profit pool perspective, X of financials and X of PSUs, Nifty is not that cheap, what it looks like to be on a headline basis. And the earnings growth of mid and small cap this year, and my expectation in next 2 years, even in small cap and others, will be higher. The reason I remove X volatile, which means Vodafone and all, because Vodafone ka loss 10,000 crore kam hota, to suddenly earnings growth looks to be great. But that's not the way to look at it. I think X volatile environment wale stocks ko thode ko hata do, and then you look at the kind of earnings growth. I think it's fair. But what is happening in the last 3 quarters, Hardik, and just to put things in perspective, why is that happening? Look at this chart. It's the story of India. That last 4 साल में corporate India ने किया क्या? ये जो black line है debt to equity ratio, they have brought it down to a less than almost one time net debt to EBITDA, which means that the corporate balance sheet is in a super space. आपको डिस्काउंट कब देना पड़ता है? जब सॉल्वेंसी इशू होती है, जो 2018-19 में हुआ. आईबीसी, all these things went into there, and there were every day some news of Diwan Housing, ILNFS, something coming up, which kept you that यहाँ पर सॉल्वेंसी रिस्क है. इस बार बैलेंस शीट्स में सॉल्वेंसी रिस्क नहीं है इंडिया के टॉप 500 कंपनीज में. We are not hearing this company is going for IBC or liquidation or bankruptcy. So I think corporate India has done a phenomenal job in bringing down the debt on the balance sheet. And you are right. And over a period of time, this is a decade. Decade में तीन इंडेक्सेस ने सबसे ज्यादा पैसा बनाया ग्लोबली। एक है नैस्डैक, एक है मिड कैप एंड स्मॉल कैप एंड यूएस 500, S&P 500। बाकी आप चाइना वाइना जो भी बात कर लो, ये रहा चाइना नीचे रेड लाइन में है। हम टैक्टिकली खेल सकते हैं, बट ऑल अदर मार्केट्स आर हॉलीडे डेस्टिनेशंस। अगर आपको रियल पैसा बनाना है तो यूएस एंड इंडिया आर द टू मेन मार्केट्स, यू हैव टू बी इन्वेस्टेड इन दोस। बाकी आप टैक्टिकल प्ले खेलते रहो ओवर अ पीरियड ऑफ टाइम, बट फाइनली मार्केट में पैसा यही बनता है। एंड ओवर अ डेकेड, आई एम नॉट टॉकिंग अबाउट 6-12 months, 2 years, 3 years, बट ओवर अ डेकेड ये स्पेस को आप इग्नोर नहीं कर सकते, विच इज मिड एंड स्मॉल कैप, बिकॉज मेजॉरिटी ऑफ इंडिया ग्रोइंग सेक्टर्स आर इन दिस स्पेस। आप होटल्स ले लो, टायर्स ले लो, ऑटो एंड्स ले लो, स्पेशलिटी केमिकल्स ले लो, ईएमएस कंपनीज ले लो, न्यू एज कंपनीज ले लो, ये सारे कंपनीज इसी स्पेस में 1 लाख करोड़ के नीचे मार्केट कैप में। अगर आप इस स्पेस में नहीं होंगे खाली बिकॉज की हमें वैल्यूएशन हेडलाइन खराब लग रहा है एंड पेंट द एंटायर कैनवस विद द सेम ब्रश, यू विल मिस। एलोकेशन आप डिसाइड कर लो। मैं ये नहीं बोल रहा हूँ 100 रुपए पूरा मिड एंड स्मॉल कैप में डालना है, बट जीरो भी नहीं होना चाहिए। तो ये 30 रुपया, 40 रुपया, 50 रुपया, डिपेंडिंग ऑन रिस्क एपिटाइट, जहां भी हो आप कर सकते हो। And just to one more last point which I wanted to show. This was the point on the market breadth which you showed, right? So just to put things in context, friends, this time around in the last 2-3 quarters, you would have seen most active managers across every platform underperforming the main headline indices. And the reason is that the median return and the index return में divergence जो है बहुत बड़ा है. Like look at this chart. The last quarter, NSE 500 was negative 4.5% return, headline return. But median return of the index was down 11.5%. 7% का differential between headline and the median return of the index, which means only few stocks in the index are holding the index higher, but the breadth of the market में बड़ा भारी correction हुआ है. And you can't ignore that कि stocks के अंदर 25-30% तो ऐसे निकले। और इस रैली के बाद भी ये मार्केट ब्रेथ आप देखो कितना लो है। आज भी 52 वीक लो वाले रेड वाले लाइंस आर फार हायर देन द ग्रीन लाइंस ऑफ 52 वीक हाइज। दैट मीन्स सिलेक्टिवली मार्केट चल रहा है एंड दैट इज कीपिंग द इंडेक्स हायर। तो ऑप्टिकली लगता है बहुत अच्छा मार्केट हो गया, लेकिन जब लोग अपने पोर्टफोलियो की वैल्यू देखते हैं, दैट हैज नॉट गॉन टू द सेम एक्सटेंट एज द इंडेक्स हैज। So there is a period which always happened, 2018-19 में भी हुआ था, and then the broad-based market happened. This time it's now 3 quarters that the divergence of index and the median return of index is happening. And why is it happening? Look at this part, the polarization of profit. So when you look at Nifty, for example, the average rolling 5 year Nifty companies with profit growth of 25% is normally 38% of the index. मतलब 50 स्टॉक में करीबन आपका 20 स्टॉक 25% के प्रॉफिट ग्रोथ देती थी, राइट? आज वो नंबर 25% है, 1/4। दैट मीन्स look at this chart, beautiful chart. The top 3 companies of Nifty incremental profit is 100%. एंड अगर आप टॉप 5 कंपनीज को लो तो 112%। आप बोलोगे 112 कैसे हो सकता है, क्योंकि कई लॉस मेकिंग कंपनियां भी हैं सो इन निफ्टी नाउ। सो आई एम जस्ट ट्राइंग टू से दैट पोलराइजेशन ऑफ प्रॉफिट्स among few corporates in Nifty, for example, is keeping those index returns higher, whereas the breadth of the index is far lower. So just keep these few data points in mind, but this is a short term phase. I think ओवर अ पीरियड ऑफ टाइम मार्केट्स आर ब्रॉड बेस्ड। तो ये 3-4 क्वार्टर, अब 3 क्वार्टर हो गया, मे बी 1-2 क्वार्टर और चलेगा, जो ये पेन क्रिएट करेगा सबके लिए। इन्वेस्टर्स आर राइट कि भाई आप इंडेक्स को भी आउट परफॉर्म नहीं कर रहे हो, आप 2-3% से इंडेक्स को अंडर परफॉर्म कर रहे हो। एंड आई थिंक यू विल गेट सी अ लॉट ऑफ दीज क्वेश्चंस इंक्रीमेंटली, बट माई बिलीव इज दिस इज जस्ट अ फेज ऑफ मार्केट जहां पोलराइजेशन ऑफ प्रॉफिट्स आर ड्राइविंग दैट पोलराइजेशन ऑफ रिटर्न ऑन द इंडेक्स साइड, and it will soon change once the growth is broad-based. And my analysis suggests that rate cuts and liquidity improvement, which RBI has done over a 2-3 quarter lag, finally moves out in the real economy. And जैसी real economy uptick देखने लगती है, तो broader market starts to perform.
No, very well said, sir. In fact, one of the points which you mentioned, where in certain phases of the market, it's better to sort of underperform the benchmark where such polarization happens, because over the longer term, then your selection will ensure you will be able to significantly outperform the benchmark.
एंड जस्ट वन थिंग हार्दिक, एक और चीज बोलता हूँ, वेबर वाज एब्सोल्युटली राइट कि नैरेटिव्स का जमाना है, एंड आई थिंक यहाँ पर गलतियां बहुत होने वाली हैं, सो वन हैज टू बी वेरी वेरी केयरफुल. What not to do in this market is very important than what to do. And I'll give you small examples. There are companies between 25 to 35,000 crore market cap, 40,000 market cap. एंड नरेटिव्स चल रहे हैं बिकॉज उस सेक्टर में टेलविंड है, नरेटिव्स हैं. बट अगर आप 5 साल का उनका क्यूमुलेटिव ऑपरेटिंग कैश फ्लो देखो तो 50 करोड़ भी नहीं है, और
Hmm.
मार्केट कैप 25,000 करोड़, 30,000 करोड़. हर 6 महीना में वो आके इक्विटी डाइल्यूट कर रहे हैं या डेट ले रहे हैं. दैट्स नॉट द वे टू क्रिएट बिजनेस. सो माई सेंस इज यू हैव टू, एट द एक्सपेंस ऑफ परफॉर्मेंस, एट द एक्सपेंस ऑफ अंडर परफॉर्मेंस फॉर अ शॉर्ट पीरियड, स्टे अवे फ्रॉम दैट. एंड मैं अपना एग्जांपल देता हूँ. 2017 मेरे लिए सबसे पेनफुल पीरियड था. 6-8 महीना में अंडर परफॉर्म किया था. मिड कैप इंडेक्स का बेस्ट परफॉर्मिंग स्टॉक था वकरांगी, अगर आपको याद हो. फिर फॉलोड बाय पीसी ज्वेलर एंड सो ऑन. आई रिफ्यूज टू बाय. मैं बोला मैं प्रेशर में नहीं आऊंगा, मैं अंडर परफॉर्म करूंगा. And the stock went up 20x in a very short period of time. It became 5% of the mid cap index.
Hmm.
There was huge pressure because I was underperforming, but I said nothing doing it. 2018, जैसी liquidity tight हुई, and you saw the tax rates by the government being increased on long term and others, you saw the correction starting, liquidity became tightened, ILFS आया, Diwan housing आया, and skeletons after skeletons started to unfold. Money was not available, and all these broken balance sheets collapsed finally over a period of time, and these are now penny stocks. So the डर मेरे को ये है स्पेस में, over longer period it will create wealth, but if you don't choose your horses right, you may end up with a company which can destroy your capital. So the rule number one, don't lose capital. Rule number two, don't forget rule number one, right? So the point is कि capital protection is the key, and उसके आगे पैसा बनाना है. And लोग हमसे बोलते हैं आप wealth creators हो. हम बोला हम wealth creators नहीं हैं, हम wealth optimizers हैं. वेल्थ क्रिएटर तो प्रमोटर अपने धंधे से, ऑपरेटिंग कैश फ्लो से बनाएगा. हमको खाली वेल्थ ऑप्टिमाइज करना है. हमको प्रिजर्व भी करना है और ऑप्टिमाइज भी करना है. ये दोनों चीज काम है, बट क्रिएशन हमारा काम नहीं है. क्रिएशन तो बिजनेस वाले अपने बिजनेस से क्रिएट करके देंगे ऑपरेटिंग कैश फ्लो. So over a period, I think not to do in this market is extremely important. Have a focus on right promoters, right cash flow, right balance sheet, and ride with them. Even if you underperform for a short period of time, it's fine. You will never lose capital by this process.
No,
Fantastic.
interesting point, and I see a lot of sectors which are thriving purely on narratives, and within these sectors, certain companies are thriving purely on narrative. So when you look at some of the businesses which are into shipbuilding, thriving purely on narratives, there is no way they can sustain these kind of valuations. When I see some of these price movements, it makes me really worried about some of the investors who are putting in money there. Some of the PSU stocks where free float is extremely limited, people are investing money in that because price movement has been extremely good. Some of these are high risk areas, micro cap stocks and IPO stocks. Obviously, the IPO number of IPOs which are coming out have reduced substantially, but again, with this bounce back, if that kind of momentum starts, that investors need to be mindful. In this environment, the most important thing will be not to invest in companies. We have seen it time and again. In 2007, we experienced this. In 2017, we experienced this. In 2021, we experienced this. Some of these companies take 5 years, 10 years, 15 years to come back to the same valuations. And some of these companies never come back to the same valuations. People who invested in new age tech company IPOs in 2021 are still sitting with losses. In 2016-17, Pankaj gave example of Akrangi. There are many such companies, and it plays out across market caps. In 2018-19, high quality stock had become the norm. People wanted to invest in stocks at 70, 80, 100 multiples and saying that these are high quality businesses. You can invest at any valuations. Stocks like Asian Paint, Bajaj Finance, even after 6, 7, 8 years, are generating less than FD returns. People who invested in infra companies in 2007 are bulk of those companies have shut down. and the remaining companies have delivered less than FD returns. So it's important that you're mindful of where you're investing. Don't react to the price movement. Look at the fundamentals of the business and look at the valuations at which you are investing. All of these are important consideration, and promoters' actions, how promoters are acting in the market gives you a fair indication of how they are thinking about their business. They are the best judge of their business valuations. So these are some of the things on top of what Pankaj said are relevant when investors are looking at. History is a good teacher. Look at how things played out in 2017-18, how things played out in 21-22. And short-term underperformance should not worry anyone.
Absolutely, absolutely. Very well said, I think, Vaibhav. And I did a series with NDTV a couple of months back. And anybody who would love to see on the investing side that what not to do and what are the forensic parameters which we use, which help us avoid mistake. देखो गलतियां तो होंगी हमसे भी, सबसे होंगी, बट बड़ी गलती नहीं होनी चाहिए जो आपको मैथ से हटा दे. You have to play the match for a longer term. That's why you will make runs. अगर आप छक्के मारने जाओगे हर बॉल पर तो आउट हो जाओगे गेम से, आप नहीं रह पाओगे. So we have outlined what are the things. It's there on our website on our presentation also. कि cash flow is why is it important? EBITDA to cash conversion 70% के नीचे नहीं होना चाहिए. क्यों auditor remuneration is important and many other parameters which we have made it a part of our process. For example, हमने एक चीज देखा वैभव जी कि everybody wants a multi-bagger in the portfolio. But what we did that we looked at last 25, 30 years in India, that what are the companies which have destroyed wealth, right? And एक हमने common चीज देखा कि जिस भी company ने हेरा फेरी की, the promoter never kept the lady family member as a part of the board.
Yeah.
So it's an interesting thing, Indian psychology, कि मैं जेल चला जाऊं, मैं पुलिस स्टेशन चला जाऊं, but neither my mom, my wife, my daughter, my sister should not be accountable and they should not be troubled. So whichever companies we saw there was a problem, the promoter never kept the lady family member as a part of the board. And we kept it as a part of our hygiene check. ठीक है, there could be reasons out there कि भाई chemical company है, वहाँ liability on a director is very high if there's a fire or an accident. So that understandable. But that's a very big hygiene check which we have seen in India, that if promoters is doing any hera fairy, he will never keep the lady family member as part of the book. So when you implement those learnings as part of your process, your ability to make mistake reduces. You will miss out on few opportunities, that's fine. But over a longer period, over a 5-10 year period, you will be able to stand on the pitch for a longer term. That's our objective. Or longevity is the most underrated tool in India, I believe. That हर जन को शॉर्ट टर्म में सबसे ज्यादा पैसा बनाना है, बट सच्ची में तो बात यह है कि लॉन्गर टर्म में अपने आप पैसा बन जाएगा अगर आप पिच पर खड़े रहो तो. मैंने 92 में देखा है, पापा ने इतना लॉसेस किया था, उसके बाद कसम खा लिया कि मैं कभी शेयर मार्केट में ही आऊंगा. दे मिस द बिगेस्ट बुल रन, राइट? एंड 2001-2 में लोगों ने वो डीएसक्यू सॉफ्टवेयर सब चीज में पैसा गवाया. नेक्स्ट 5 साल 7 साल 8 साल कसम खा लिया कि हम वापस मार्केट में नहीं आएंगे. वापस यही चीज हुआ लास्ट 6 महीने के अंदर. जो आपने 1 साल में बनाया आपने 2 महीने में ही खो दिया. मार्च में जाके आपने टैक्स हार्वेस्टिंग करने लगे, तो टैक्स हार्वेस्टिंग में जो माल बिक गया वो अभी अप्रैल मई में ले ही नहीं पाया आपने. So I'm just saying these are phases of market. So longevity is the most underrated tool. Just think about next 5-10 years, how much wealth you want and how we want to create it. And I think you will be very, very in control of your temperament.
Great, great. I think a lot of great insights here. Thank you for some of the candid insights in terms of your own journey as well, Pankaj. Vaibhav, you obviously took us through the entire last 2 decades of all the mistakes made in different segments and different stocks. And we'll obviously have a deeper segment into individual stock picking. Before that, Pankaj, you obviously showed a lot of data points where you suggested that the uh, market rally was narrow primarily because the profit pools were narrow. But now, where we look at the macros, interest rates where they are, liquidity being infused by RBI, fundamentally at the fiscal level, we seem to be on a sound footing relative to other economies. We are on a great footing as well. How do you see the earnings revival happening at a broader level? One, of course, select set of stocks have demonstrated great profitability even in the last period, but generally we've seen that the profit estimates have missed the street estimates over the last year at a broader level. How do we see this play out over the next year or so?
Yeah, just I'll show you a few slides which may help. Uh, you can see this, right?
We can see your screen.
Yeah. So just a minute. Huh? So look at this one. I think this is our thought on the estimate that Nifty probably X of volatile numbers, which is oil and gas and a bit of metals, should grow about 12-13%. But on a headline basis, it will be about 10-12%. Small cap and mid caps, I think, should grow mid teens or at about 18-20%, which means that there will be certain companies in this both spaces which will grow. Last year, small cap space didn't grow well because a large exposure in small cap is to MFI and smaller NBFCs, which had their own pain and cyclicality, and that dragged the earnings growth. But mid cap had about a 20% earnings growth. If you look at this chart, this one. Now look at this year, we have moved to 5.1% as a percentage of GDP growth. I think this is one of the highest. And the loss-making companies, which were very high in 2021, 22, PSU banks, some of the other PSU names, small caps, I think the loss percentage has definitely narrowed down to 0.27. So that's the reason you are seeing that overall all profit pool has expanded at a faster pace in the last couple of years compared to previous past. This is our expectation that on an average, earnings growth for the next 2 years for Nifty, I'm saying, will be better than what we have seen in the last year on a adjusted basis. And look at where is the earning growth coming from. This is FY26. If you look at this column, growth year on year. So it will be cement, metal, cyclical, a lot of cyclical sector. Then you will have banking actually not growing that fast because of the NIM compression in FY26. But 27, if you look at banking, will grow at about 17-18%. So this year could be a slow year for earnings growth for banking because of the rate cuts. Then you look at telecom again. You have a very strong growth led by Bharti, Jio, and losses coming down on Vodafone. And otherwise, you have cement doing well, consumer coming back. Consumer this year was a degrowth for a few companies which we overall track. We believe that with the tax rate cut and 20,000 crore incremental money being given in the hands of consumer every month, which will be seen in the form of growth in the consumption sector. And then you have healthcare and NBFC, which will do well. So this is the breakup of the growth which we see across different sectors in FY26 compared to FY25.
Got it. Vaibhav, your views on corporate earnings revival over the next few years?
Oh, I think RBI has done a phenomenal job, and we spoke about that, and that should augment the revival in earning. Along with that, the slowdown seems to be more cyclical last 2 quarters. Some of the issues which we faced were around election-related slowdown in government spending. When we look at the GDP number, we saw substantial uptick in government spending. Along with that, if private consumption and private capex also starts moving up, then we'll see a strong rebound in the earning. I think the worst of earnings slowdown is behind us incrementally. Even this quarter, results were much better compared to what markets were expecting. In fact, the upgrade to downgrade ratio has improved substantially. More companies have seen earning upgrades compared to earning downgrades. So all of these are lead indicators that earnings are likely to improve going ahead. So these are good indicators, and 12 to 15% seems to be a reasonable expectation of broader market X of volatile sectors. Some sectors will have, and divergence in earning will be pretty large. So we need to be careful about which stocks and which sectors we are invested in.
Great. I'm a little mindful of the time. We've got 15 minutes left. I'll take one general question and then we'll move to audience questions. Audience, you can start posting your questions on the Q&A box. In the meanwhile, we'll start picking up once the last question is addressed. This is, obviously the favorite question from an audience perspective, that macros are great. Corporate earning revival should happen. We are seeing great lead indicators for that. what should we as investors do? How should we construct our portfolio? Right from selection of categories to sectors. What's the right size of their equity exposure? Thoughts on fresh deployment, rebalancing. Generally, we'll start with Pankaj and then we'll carry on with Weber.
वैभव इज द मास्टर इन दिस यार आप उससे पूछो मेरा तो दिल इक्विटीज में है, मैं तो भागचा मैं इक्विटी बोलूंगा वैभव इज द राइट पर्सन टू
नहीं
स्टार्ट
सर, ये इक्विटी के बारे में ही हम पूछ रहे हैं. सो जस्ट इन टर्म्स ऑफ
विद।
इक्विटी, हाउ शुड वी
बहुत
गो अबाउट
ये
कंस्ट्रक्टिंग दैट?
हार्दिक भाई मेरे को ये सब क्वेश्चन बहुत जेनरिक लगते हैं सी कि risk appetite is very different for different investors, right?
एब्सोल्युटली यस.
I have seen a 80-year-old person and उन्होंने बोला कि बेटा मुझे सबसे हाईएस्ट रिस्क प्रोडक्ट दो क्योंकि मैंने को जो लाइफ जीनी थी मैंने जी ली अब जो पैसा है ये मेरे नेक्स्ट 2 generations को जाने वाला है एंड व्हाई शुड आई डिस्टर्ब द कंपाउंडिंग बाय
करेक्ट.
हैविंग a fixed income or higher fixed income allocation because I am 80 years, right? My lifestyle will be taken care of. There is a other person at 35 40 जिसको रिस्क लेना ही नहीं है. So I'm just saying this is a very generic statement. But if I was you, I would have 40 to 50 bucks today across good active managers in the mid and small cap space where they can pick up right stocks without hurting the capital protection, okay, over a period of time, and who have demonstrated that. And baki 40-50 rupees, I will have 10-15 rupees in gold silver combination because I think that's a bigger hedge you need to have. And the rest 40-50 rupees, I think jo bhi bacha will have large cap, flexi cap, and maybe if you want a few sectoral, tadka, that could be the way. But I am not a great sectoral tadka fan. I believe that flexi cap, large cap is a right way to go about it, and the rest 40 30 to 50 rupees whatever you want you can have this in the broader market space with the active managers. वो आप डायरेक्ट स्टॉक पिकिंग में खुद ट्राई मत करना बिकॉज वहां पर हाथ जलने की संभावना और probability is much much higher. So that's why like my layman thing, but Vaibhav is a master, you guys are master in this, so I'll leave it to you guys.
What do you, Weber?
The first thing, US S&P 500, there's very interesting study there. A median drawdown in stock, and by drawdown means peak price to the bottom price in any stock, is 75%. So if you are investing in equity over a long period of time, and there is a 100-year analysis, a median drawdown or drop in the value in stock that you can experience is 75%. Amazon fell down by 95% in 2000. So when you are investing in equity, you need to understand what you are likely to experience. You may or may not experience, and therefore you have to stay invested for a long period of time. If you want to create wealth in equity, first thing that you need is a long time horizon. Second thing, in today's environment, active fund management and bottom-up stock picking is likely to do much better compared to broader investing in the market. So that's important. Third thing, some allocation to fixed income through short-term bonds. I think RBI has also clarified its stance that no longer rate cuts. They have gone all in yesterday, and we should not expect any further rate cut. So if you are looking to invest money for 2 to 3 years, then invest in short duration fixed income instrument and have some allocation to gold and silver. So these are some of the asset classes that I would recommend. But investing in equity, if you have a short time horizon, you should avoid that. Be ready to face volatility and be with quality companies and quality fund managers because recovery happens only in quality companies.
Great. Thank you, Pankaj. Thank you, Weber, for an insightful discussion on the economy, the evolving equity landscape, and of course, the nuanced approach on equity portfolio construction. We'll now open the floor for questions. We've got about 10 minutes left. As always, we'll try and address as many questions as possible. Do
Sorry, Hardik
exposures.
bhai, we haven't spoken about the risk. I think all good, but I think keep a very close watch on global yields. I think that's a very, very big important thing to note about. You are at 10-year US bond yield at 4.5, the 30-year yield as 5% plus. My only worry is that if it crosses 5%, the 10-year bond yield in the US, uh, which you can't rule out, it's a black swan event. So all bets are off then for a while. Uh, Institutions will be sitting on huge mark-to-market losses. Banks need to recapitalize them. Central banks will be sitting on huge USD holding losses. So keep that in mind that if your bond yield is starting to give you 5.5% return in US, then why would you take risk of moving into equities? So I think that's a very, very important thing to note as a risk factor. You have seen in Japan a 30-year bond yield moving to 3.5%, which is not seen for almost decades now. So keep those risk in also mind when you are allocating to equities, because those are global risk which can hurt us also as a country, as a market. So
No,
just I
very
know that some risk points need to be also spoken about.
very well noted, Pankaj. Essentially, your thought is that there could be a risk-off situation from all liquidity perspective. People could just move to bonds for the time being. Equity liquidity could get
Whenever that
completely
happens,
snuffed out.
whenever it crosses 5%, just
And
keep a close
what would
mark.
you say in the light of the new bill that the US Congress has proposed? Uh, where do you see that going from here? Of course, it's a developing situation, we all know. Do you see the risk, the odds of that happening high, low, or we need to sort of just look at and see how it evolves?
So I have a very limited understanding. If Elon Musk and Trump doesn't know, and 20 days back they were bump childs, and today they are fighting openly in the public on that bill. So let's see how the situation evolves. But I think what it means, and just to give you a data, that 33% of US wealth is held by people above 70 years of age. Uh,
Okay.
and the real Gen Zs, they don't have money, right? And this bill, in a way, give more allowances to elderly people in terms of tax cuts and tax rebates. The second one, most important, where they have got into differences between Trump and Elon Musk, is taking away all the support which the government was giving to the EV industry, the tax credits and other support to the purchase and everything, which led to the evolution of the electric vehicle industry in US. And that's what made Elon Musk very furious on why is that happening. So few of those things are very, very important to note from an overall perspective. But let this bill first settle down, because I think it is having its own challenges in terms of implementation.
Perfect. Well noted, sir. We'll move on to the questions now from the audience. I'll try and address the macro questions first, then we'll move to specific questions around equities. Uh, Trump Musk feud, we've spoken about it. De-dollarization is happening globally. What will be the impact in India? Weber, Pankaj, any thoughts?
Yeah, I'll just show you something which is very important, uh, which may be, just uh, so look at chart and just keep data in mind. This is 2015. The total non-US entities had invested $26 trillion in US in 2015. This number stands at the end of 24, about $56 trillion. Okay. $30 trillion of money has flown in the last decade across equities. So equities was $5.5 trillion. Now non-US entities hold about $16 trillion in US equities. Treasury, which was 6 trillion, is 8.5 trillion. So there's a large money which has flown in the US equity markets by the foreigners. Okay. Now, look at this 2015. Except US, which is still calendar year to date negative, most of the other markets, the non-dollar markets, have performed brilliantly. And the question people are saying, is the tide turning now? That the US exceptionalism, which we saw for the last decade or so, and everybody used to say, why invest in other markets when S&P can give you a compounded 18-20% return in dollar terms? And that was the case in 23 and 24. But now with Trump 2.0, dollar is the weakest asset class we have seen. DXY has seen a collapse from 109 to 99, 98. And that is a trend which people are betting on, that de-dollarization could be the Trump 2.0 highlight. And if that happens, non-US asset classes can do far better than the US asset classes. Look at this part. This is the entire ETF in dollar terms across the world. The US is here, right? Which has given you a negative. India is slightly not done great, 3.5%. But look at other countries. Spain, Greece, who would have thought? Hey, Italy, Germany, 30% return in Germany, where everybody is talking US, Europe is struggling. My bet is next year, which is 26 calendar year, Europe will bounce back in economy in a much, much stronger way. And markets are a lead indicator of that. And what is happening in Germany, Spain, Italy, they are all coming together and saying that let's think about defense, let's think about reviving our economy back again. And major capex is on the way, which will happen over the next 4 or 5 years in Europe. So if I was to bet a little bit of international money, I would bet it on European indices or European, some of the names out there. And along with that, you will have the emerging markets, which is doing well. Look at the world ex USA. It is up 14% in this calendar year. Nobody thought about it, and US is negative. Is the tide turning on the de-dollarization is something which people are betting on. Let's wait and watch.
Great, sir. We'll move on to the next question. Vepo, this is a generic question around allocation to equities. Should we wait and watch? Do we anticipate that there can be a correction that's around somebody with fresh liquidity? And a corollary of that question is somebody with money already invested in equities. Should they rebalance, keep the money in liquid, wait for the correction? So your thoughts on timing the market?
See, first thing is you should stagger your investing, because the real risk which is looming large is in case US interest rates cross 5%, then it's a real risk which is emerging in the market. So stagger your investment. If you're already invested, two things you can do. If your portfolio has done really well and your asset allocation has changed because of equity doing really well, rebalance your portfolio, bring your equity allocation down. Third thing, look at your portfolio very carefully where you are invested. And that for me is more important than staggering and anything else. The wealth loss in poor quality stocks can be pretty large. So review your portfolio and see where the pockets of risk are and try and reduce that risk in the portfolio. Overall portfolio theme, as we said, we are moving away from more top-down market, which we witnessed over last 4 years, where broader markets did well, to more bottom-up stock picking market, where active stock picking will do much better compared to broader market investing.
Uh, Fair point. About general questions around gold, silver allocation, and what's the best way to play out some of these segments? Is it through ETFs?
Index gold funds and ETFs give you good exposure to these funds. They are liquid, tax friendly, and easy to invest in. We run a currency hedge strategy where we invest in these precious metals, so that can be considered for investing in these asset classes.
Right. Next question, Weber, Pankaj, if any of you want to answer it. This is around the impact of AI. Do we see the Indian IT services being significantly impacted by that? Any lead indicators to suggest that this is already happening? Maybe globally, maybe in India.
Yeah. So Hardik, if you look at the IT hiring, okay, for the last 5 quarters of the top IT companies in India, there is a negative hiring right now. Okay. So whatever people are leaving, they are not replacing it, and they are trying to upgrade the skill set of the employees. So I think Indian IT services, and you have heard the commentary in April, that most guys are having a tough time in terms of growth. Just look at it simply: when the client is unsure with tariffs, with AI, so many other things, whether they will invest back into the business, they also don't. Most of the high tech companies, BFSI companies, and so on and so forth. So, my sense is that Indian IT services company will go through a slow growth phase. The large guns will grow at between 3 to 5%. There'll be few mid cap IT companies like Persistent, Coforge, they are growing at a much faster pace. in the last 4 5 years. They may continue to do so. So you have to choose your bets carefully on the IT space and make sure that you are not overpaying for growth. Wherever today the biggest dichotomy for a fund manager, or the biggest problem for a fund manager, is where there's growth, there's no valuation comfort, and where there's no growth, people don't want to buy it. So that stock is languishing. So there's a huge divergence, and you have to be very very careful, because if growth slows down in any of these companies where you are paying crazy multiples, you could be in trouble. But overall, I think IT services in India will have a slow growth phase. And that's why some of the other names like platform companies are gaining prominence. And just to put in context, 5 years back, platform companies were zero market cap. Today, they are $100 billion market cap combined together. So that's a discovery India has seen already silently. And we all are witnessing this history in front of us.
Perfect. Guys, Vaibhav, Pankaj, is it okay if we extend this by another couple
Yeah,
of
yeah,
questions and
yeah,
we'll
yeah. Please,
stop it
please
at
go ahead. Please go
12:05?
ahead.
Vaibhav, the next question is for you. When you are identifying funds, do we also do attribution analysis? This is essentially from a perspective of where the large gains have come in and whether or not it is sustainable. Is that part of the analysis?
Yeah, it's part of the analysis, not just in the context of that fund, but we also look at fitment of that fund in the context of other funds that we have in the portfolio. At an aggregate level, how our portfolio is structured is an important consideration instead of just looking at single instrument and their attribution.
Got it. Last question before we end the session. Mid cap, small cap, we've covered it. Uh, Last, I think, parting question would be around the fact that yesterday the repo rate was cut by 50 bips. Any thoughts around allocation to fixed income, how to play out bonds, how to play out any other segment of the fixed income from here on?
I think best of the rate cuts is behind us. I don't think 10-year GSEC will go down substantially from the current levels. So investors will be better off investing in high quality bonds of short to medium duration and earn higher accrual than to play a high duration bond and expect substantial capital gains out of it. So that's how I would play fixed income in the current environment.
Great. Once again, thank you so much, Pankaj and Vaibhav, on behalf of the audience. This was honestly a very well balanced conversation on market insights as well as practical advice for our clients. I'm pretty sure the audience walks away with much sharper context and pretty much actionable takeaways from here. Pankaj, for me personally, the best takeaway was that founders in the age of 40, 45 have the most fire in the belly and they'd create the most value. That's where all three founders of Deserve are as well. So thank you for that note. To our audience, thank you so much for your time and patient listening, and honestly, all the thoughtful questions throughout the webinar. We look forward to having you again for future conversations. Have a lovely weekend, all of you. Thank you so much, guys.
Thank you. Thank you. Lovely. Bye bye.